Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to share with you the CPI data that came out last Thursday. I'm also going to be running down the various timeframes of what's developing for Bitcoin. And as the title of this video says, I'm going to share with you a chart development which hasn't happened since 2014. This is the channel where we are navigating through the Bitcoin charts together to add value in our understanding of exactly where we are with Bitcoin and where we are likely to go in the next few days and weeks and months ahead. Please make sure you stick around to the end where I'll share with you a bonus tip of 2 levels I'm looking at for a swing trade. So if that sounds interesting, then without further ado, drop everything, make yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we do that, it's time to open the Bitcoin vault and let Bitcoin come into our lives. Okay, I hope you liked that, and if you did, then give us a thumbs up. It makes a huge difference to the channel. And before I begin, the usual polite reminder, please remember all my videos are for educational purposes, not financial advice. Therefore, please do your wider research before you make any important decisions. Okay, so let's start off by looking at this CPI data, which I mentioned to you last Thursday, just a few hours before this figure came out at 8.2%. The expected figure was 8.1%. So obviously it had been, and keep this date in mind, November the 10th, that's when the next inflation figures will be coming out. And the reason why those figures are important is that it has an unnerving effect on the market like this here. So this is last Thursday. The price was around about the 18,900 level, and 2 hours before the figures were released, we had this big candle on the hourly chart at 11 o'clock, and the figures were going to come out at 1:30. Then between 12 and 1 o'clock, we had this green candle here as a response to this red candle. But as the figures came out, we went all the way at the top at 18,900 all the way down here to 18,100. That's the effect these figures have. But once the market had digested the figures, in the next couple of hours, this is what happened. We got a green candle followed by an indecision candle, and then we got this big rise all the way from down here at 18,400 to the top here at around about 19,900. These figures in the CPI data are giving us a very strong clue that the effects of the interest rate rises, which really started the 0.75% rises since July, August and September, that from the beginning of the year when the prices were rising, which topped out at 9.1% in June, since then, as you can see here, the figures have been falling and getting much better. So the trajectory now is to the downside. And as the interest rate rises work themselves through in the next few months, it's going to get to the point where these figures are going to start falling sharply over here, which goes into the narrative that by December, we should start to see some momentum come into the markets. And always remember, the markets respond many months before the data actually plays itself out. So before people know that these interest rate rises are working through, the market will have bottomed out and would have been already going to the upside, because the market's always anticipating where these figures are going and they bake them into the charts. Okay, we're going to move on to the weekly chart here. And as you know, we topped out here at 69,000 back in November. And since then, we've had this very big dominant trend to the downside. And it's now culminating in some sort of a bottom shaping out here. However, as we can see, this bottoming out process is creating 2 W patterns. Maybe this is the one that comes to the upside here. However, there is another one there that's developing as well. So you're getting a double W effect. But within this pattern now, we've got this trend line, a downward sloping trend line from this high here of 48,000, which is going to the tops of these candles here, and we've got our support line at around about the 18,000, 18.5 here. And as you can see, we're right in the apex of this development here. If we have a close look at this, we can see the psychology of what's happening to the price action. I suppose you can draw this a little bit lower to take into account the bodies of the candles and the wicks here to get more touch points, which then makes the current weekly candle here outside of that. So it looks really quite imminent that we're going to have a break either to the upside or to the downside from here. And if I put on the 8 EMA on the weekly chart, we can see quite clearly that this last week's candle was rejected once again at the 8 EMA here. And if we look at this long wick at the bottom of this candle, that's telling us that there's a rejection of lower prices. And as you can see with these wicks here, there is a lot of demand at these low levels where the Bitcoin price is being bought up. But on the flip side, you can see the long wicks at the top here. So there's a rejection of higher prices here as well. So there's a real indecision going on, and it'll have to break sooner or later, as you can see with the squeezing of the Bitcoin price within these resistance and support levels. And if we zoom out again, since we topped out at 69,000, we've only closed once and twice above the 8 EMA, and most of the time we've been rejected as the prices hit the 8 EMA on multiple occasions here, and once again last week here. So you can see that the 8 EMA on the weekly as well as the daily chart, as I've shown you many times in the past, it has a great respect for this moving average. And that gives us a strong clue that once we get above the 8 EMA, especially on the weekly chart, which is currently at 19,700 level, once we can recapture that and confirm it with a further candle, we could well be on our way to much higher levels. Similarly, on the daily chart, we can see that within this descending triangle, the price action is right on the edge of the apex. And if we put on the Bollinger Bands, you can see quite clearly here that the price seems to be respecting the Bollinger Bands, and the Bollinger Bands are pinching together, and this squeeze here doesn't happen very often, and when it does, we're usually waiting for a very quick big move to the up or the downside here. So a volatile move is about to take place very shortly in the next few days. But the reason why you should always have the Bollinger Bands on your chart is because you can see quite clearly when we get to the bottom of the Bollinger Bands, it acts as a spring to go to the top, which acts as a resistance to go back to the bottom, to the top, to the bottom. And now we're right in the middle here, just below the 21 moving average in the middle of the Bollinger Band. And the top of the Bollinger Band there now is at 20,100. So we could quite easily revisit that and get rejected at that point. But before that, the blue line here, the 8 EMA on the daily chart, is acting as very strong resistance. As you can see here, we've been rejected here already. We tried again here, and currently we're just above it now here. Let's see if we can close this candle above the 8 EMA as a sign that we may well be on our way up to the top of the Bollinger Band here. So as the title of the video says, we have a development in the charts which hasn't happened since 2014. What is it? It's actually this volume profile. See, what's happened in the past is that if we go back to the top of the previous bull market in 2018, we topped out in December 2017, and then we had this 12-month bear market down here. Now, if you look at the volume profile here, at the top of this bull market, you saw quite a lot of these long candles here for the volume. But as the bear market ensued, we got a fall in volume very sharply here, as you can see from this line. Currently, in this cycle, we topped out here at $69,000, and we've had this bear market similar to the 2018. But if you look at the volume profile, it's been quite flat. However, if you look at the accumulation period in 2018, before the market started to go on this next bull run, it's quite interesting that after this capitulation that we had from 6,000 down to 3,000, and then this consolidation, accumulation period, the volume again was falling down during this accumulation period. But currently, in this accumulation period here, it's very interesting that the volume has actually been rising, unlike this cycle here. And this rise in volume during a consolidation period, the last time that occurred was back in 2014. We can see that when we topped out at the end of 2013 here, in the ensuing 12-month bear market, the volume also, like the second cycle, fell down here. And when we consolidated at the bottom of that bear market here, so in this accumulation here, so as you can see, we had a big rise here in the volume, and then it started falling off. And as we can see, the volume was much, much higher in those days than it is here, even though it said rising volume. So what can we read into this? What is it telling us? As you know, when we topped out here in 2018, this volume profile here, this falling off of the volume, may be the reason why we didn't consolidate enough here. There wasn't enough buying over here, as we can see by the volume, and hence we didn't create the proper foundation for a proper bull market over here. Because we had an initial run here, a mini bull market up to 14,000, which petered out, and we came all the way down to these levels, and we tried again after the COVID situation to get back up, and again, it didn't really go into a crescendo where we had a blow off top. However, here, with all this volume during the consolidation, maybe that was the reason why we had a proper run to the upside. And maybe that's what we're going to have as a result of that for the next bull run. We're creating some sort of a proper foundation here, a consolidation, which will actually help it to go much further and in a more normal bull market. So make of that what you will, but if you look at the longs and the shorts on the various exchanges, you've got longs at the Bitfinex exchange at 97% and shorts at 2%. On the BitMEX exchange, there's 50% versus 49%, so that's more balanced. And on Binance, it's 70 versus 30. So obviously, in the exchanges, there's a lot more long positions going on here. And maybe that's causing a lot of the upgrade in the volume. Okay, so we'll see how that develops and how that plays itself in the Bitcoin price in the next few days and weeks. I said at the beginning of this video, I'm going to give you a bonus tip of the 2 levels of the swing trade that I'm looking at right now. So here it is. What we have are 2 well-defined levels here. The first one is at 25,500, which is at the bottom of this wick here and the top of this wick here. And that's at around 25,500. The second level is that when we came back down here, we got rejected at this point here, which is very, very important, because if you look left, it's exactly at the point we got support here and rejection over here as well. So we know that when the price comes back to this level here, we're going to get some sort of a pullback. And we do have another level here at around about the 18,000, 18,500, where we've been finding continuous support at these levels here. Obviously, we bottomed out so far on June the 18th at 17,500, but the main support level seems to be around the 18,500 level, as we've seen with these wicks down here. So what we have is 3 levels where we could do a swing trade. And the way I would do it at these levels is that, and swing trades, they're all about levels. And the 2 levels to play really here are, if we lose this level here, if the price comes down, comes back down, and we recapture this support level, that's quite a good sure sign that with a high degree of probability, we're on our way back up, at least to these levels here. So there would be a trade once we recapture this having fallen through the support line. And the second level would be if we recaptured this very strong resistance point here now at 22,400. So if we go from where we are now to the 24.5, recapture that, that would be the signal to go long from there. And then you've got to play right up to 25.5 there. So that's the 2 levels I'm looking at, and see how it develops. Always remember that no one has a crystal ball, and I always believe the best position to be in is always to be flexible and neutral, so that if new information becomes available, then that may invalidate your original thesis. Then you just have to adjust your thinking and not be stubborn. So in my own view, I always hold my thinking regards Bitcoin very loosely, because if you don't, I found to my cost in the past that the alternative is that you will be actually setting yourself up for failure. So always be nimble and be willing to move to a new thinking once the new information is available. So I hope that helps, and if you found value in the video, then please do remember to like, to subscribe, and to turn on the notification bell. If you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.